Hello and a warm welcome from my side. Let me guide you through the Q2 2024 results and the recent company highlights. We had a strong improvement in EBITDA, jumped from 31.3 million to 46.5 million to a record high operating result. We also had a solid revenue growth by 52.9%, obviously driven by the KATEK acquisition. But even without KATEK, we grew on a like-for-like basis 6.1% organically. We also achieved a solid increase in profitability to 21.6 million net operating result, despite one-off effects. Without those one-off effects, the net result would have been even higher. We also achieved a very strong order intake in Q2, despite the current macroeconomic environment, resulting in a book-to-bill of currently 1.29. The backlog is now standing at around 2 billion for the entire Kontron Group. Looking at the company highlights, we had a strong improvement in the gross margin as well, which jumped to 42.5%, implying that the leap in technologies with many new products, which were launched 2023 and hit the market beginning of this year, Kontron Operating System, Kontron Grid, and NIS2 compatible products for the critical infrastructure start to pay off. You may be aware that we have also launched a public tender offer for the remaining free float of KATEK, which resulted in a delisting of KATEK by the end of the second quarter. Kontron now holds 87.3% of the shares in KATEK. The integration of KATEK is well advanced with an efficiency enhancement program and a streamlining of the revenues. We've also announced a share buyback program in Q2, which started in July of this year for a buyback of 10 million euros in Kontron shares. Let's look at the KPIs for Q2 in more detail. The revenues jumped from 277 million by 53% to 424 million. If we compare those 424 to the new orders booked, 524 million, we get to a book-to-bill ratio of 1.29. Implying a growth of 29%. The gross profit jumped from 115 million to 180 million, a growth of 57% at the gross profit margin of 42.5% compared to 40.6% for the same period last year. The EBITDA jumped by 49% to 46.5 million, resulting in an operating net income of 21.6 million. That's an EPS growth of 17% from 30 cents a share to 35 cents a share. The operating cash flow was at 2 million in Q2 2023. It went to minus 6.1 million, but we have to adjust for reduced factoring. Factoring at Kontron was reduced by 23.4 million in the second quarter, implying operating cash flow of 17 million. That's a growth of 8 times the operating cash flow for Q2 2023. Let's compare to the KPIs for the first 6 months of this year. The revenues jumped by 45% to 780 million. We have to compare those 780 million to the new orders booked in the first 6 months. They amounted to 919 million, getting to a book-to-bill of 1.18, or implying a growth of 18%. The gross profit stood at 327 million, growth of 47% at the end of the first half of this year. That's a gross profit margin of 42%. The EBITDA jumped by 35% to 82 million, resulting in a net result of 37.9 million. That's earnings per share of 61 cents a share, or a growth of 6.5%. The operating cash flow stood at 7.3 million at the end of the first half last year. It went to minus 16.8 million, but has to be adjusted for the reduced factoring in Q1 and Q2, as well as for a turnover effect at the end of last year, resulting in an adjusted operating cash flow of 40.8 million. That's 5 times the operating cash flow the first half of last year. Looking at the Kontron Group balance sheet, you see the impact of the KATEK acquisition. The assets jumped from 1.4 billion at the end of last year to 1.8 billion at the end of the second quarter. While the equity stood almost at the same level, despite a significant outflow of cash due to dividend payment in the second quarter, the equity ratio went from 44.1% to 33.7%. Why is that? There was a shift in the debt structure, which went up from 210 million to 440 million due to the KATEK acquisition. Thereof, 105 million of existing debt have been refinanced already by Kontron at favorable conditions. At the same time, we took an acquisition loan in order to finance part of the acquisition of KATEK. The other part of the shares were acquired by cash. That's the reason why the cash and cash equivalent position went down from 330 million to 230 million by the end of the second quarter. At the same time, working capital went from 170 million to 400 million, which was heavily impacted by the increase in inventories from KATEK, resulting in total inventories position at the end of the second quarter of 450 million. We've pledged to get the inventory level to below 400 million by year end, as well as to reduce net debt to below 1 times EBITDA by the end of 2024, resulting in a healthy balance sheet outlook after significant cash outflows due to the KATEK integration and the dividend payment. We had a massive design win volume increase in the first half of this year. The design wins increased from 4.1 billion to 6 billion within the first half of this year, an increase of almost 2 billion. The backlog jumped from 1.7 billion to 2 billion. Then there's an increase of 124 million on a like-for-like basis within the second quarter. The backlog is now more than 1 year of revenues of the Kontron Group. The increase in the backlog was heavily impacted by new orders for smart wall boxes, and we also announced a new order for a satellite communication system in the Americas at the beginning of Q3. The IoT growth has recently accelerated, driven by several megatrends. Against this backdrop, we expect to double our revenues within the next 4 years. The mega drivers for IoT and devices security for IoT and artificial intelligence. Most IoT networks do currently not comply with NIS2 requirements. At the same time, Kontron OS offers already unique features to protect edge devices and the grid. For artificial intelligence, 75% of the needed data are generated by IoT devices. AI will not work without IoT devices. Kontron provides already mission-critical control systems for industrial automation and high-speed trains. GreenTech with IoT software, making smart solar inverters and smart e-mobility chargers much more efficient and easier to handle. And we provide VPX modules with mission-critical standard for defense, and Kontron operating system is already installed on over 4,000 planes. Looking at the history of Kontron's results, you see that we are poised to achieve record high results this year. The guidance, we expect revenues of around 1.9 billion, a growth of 55%, an EBITDA of 190 million, also a growth of around 50%, and net income adjusted for non-cash PPA amortization of intangible assets of 100 million, a growth of 33%. Thanks a lot for your interest in Kontron, and please don't hesitate to reach out to us at ir@kontron.com if you have any questions. I look forward to discussing further with you. Bye.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.